Eric Mwathe with Mwathe.com with a U.S. market analysis for the weekend of March 12th, March 13th, 2016. Let's take a look at markets here with about less than 1 hour to go before the close of Friday's session. Let's take a look at markets here. We begin by taking a look at the Nasdaq. Let's go to the Nasdaq Monthly, and I want to begin with perspective. If we take a look at the long-term monthly view, we can clearly see that the market tends to respond very well when it bounces on the 50 level of its monthly RSI, especially if there is uniform action bounce below 50 and back above it. So let's test that. So going back to 1990, this is uniform action above 50, back above it. So that was a good re-entry in the market. During this time period here, back above 50, the market was a buy in 91, late 90. Here we came close to 50 for the lows of 94. We touched that for the lows of 98 right there. We touched that again. We are testing this theory that the market, when it bounces at the 50 level on the monthly, it tends to move to new highs. Same thing here in 06 for the lows there. Double bottom support here around the 50 line on the monthly for the Nasdaq for those lows. We touched that line and bounced back above it for those lows, and now in 2016 we are doing the same thing. So as long as the market is holding that line, the 50 level on the monthly for the Nasdaq, one can assume that month to month the market is potentially going to be moving to the upside. Now, markets don't go up in a straight line. We can see that on the weekly chart for the Nasdaq, we are coming back to test some weekly levels which correspond to recent highs on the Nasdaq, and we can draw the line like that. You can see coming back here, testing the 50 level on the weekly. Resistance around there could suggest the next swing trade is down. Also, there's another line which represents the break coming into 2016. So this break on the RSI on the weekly brought the market off the highs of December, and of course we know we had a plunge here, and now we are coming back to test that line, which so happens to be around RSI 50. So if the market shows resistance on the red line, then we can assume that the next swing trade is to the downside. Otherwise, market bulls would like to see the market move above this resistance on the Nasdaq. So for the market to move higher, it does need to clear that line of resistance connecting recent weekly highs on the RSI. If we take a look at the daily for the Nasdaq, the market is right now moving above the recent daily closing high. So for the Nasdaq, the level to watch there for continued momentum is for the Nasdaq to hold above 4,717.02. Anything above that, which is the recent daily closing high, and the market should continue having momentum to the upside. So one can watch that level. If the market moves back below that level, then this short-term breakout is stalling. So above that, and we give the benefit of the doubt to higher prices, if the market coils back below that number, then that is suggesting that the market has run out of momentum. So right now we are seeing the market staying above that for now. So clearly momentum net short term should still be given to the possibility of higher prices. Now, having said that, we can clearly see that the line we were watching and have been watching for potential resistance on the Nasdaq is still coming into play right here. So this line here, which was the break line right there off the recent highs of late November, early December, has come into play again. So the market needs to clear that line. If it cannot clear that line, then that is going to be confirmation that the next swing trade is down. Keep in mind that this line has been a problem going back to the actual highs on the Nasdaq here, with uniform action rejection on that line there, and since then we haven't been back to those levels. In fact, even before that, it was a short-term resistance before a pullback. So this has been where the market has been struggling, this red line. If you're a market bull, you'd like to see the market clear that line. So we'd like to see the market move above that line if this is truly the beginning of a recovery. Otherwise, if we cannot hold above that red line, then the suggestion here is that if this is confirmed as a short-term resistance level, then the next swing trade is going to be down. If we take a look at the Dow on a long-term monthly chart going back to 1990, again we can see here that on monthly chart for the Dow, every time we bounce on the 50 level on the monthly, we get a major low in the market. We did the same thing here, 98 for the lows there. Here we had double bottom support just like we saw for the Nasdaq for the lows of 2010. We touched that line for the lows of 2011. And here, if you combine the lows of 2015 and 2016, right now we have a nice double bottom, suggesting that these are good enough lows potentially to move the market higher in the coming months, as long as the market is holding above that 50 line. So as long as the market is holding that 50 line, then one can assume that the next multi-month move in the market is going to be to the upside. Now clearly here we know that if at some point the market was to change direction and come back and break back below the 50 level, then that would suggest that that is when we might see the next washout to the downside. Right now, if you are to be neutral, you can see that the market is actually bouncing, and all things held neutral, we have to assume that net month to month the market continues to be very, very strong. Since every market has its own challenges, right now we are looking at on the Dow also on the monthly we have potential resistance. If you take a look at this 3-year monthly chart or 3-year weekly chart, so 3 years worth of weekly data, you can see that we are coming right here, and the market is potentially coming back to test the top side of the weekly RSI chart. Keep in mind I'm recording this right now with the markets close to the end of the week, end of the session, with about 45 minutes to go. Dow is up about 207 points. So that's one layer of resistance. Again, the top side on the weekly, very simple line, 3 years worth of data. The market is coming back potentially to test that line. And also if we take a look at a 2-year weekly, so a little bit closer view, if you take a look at where the market made a high right there last year in May, since then the market broke down on the weekly chart here in May, bringing the market off those highs. We haven't been back to those levels, and we can draw a line from there that we can use for future sell points. So that line was very good in giving us the highs of December, November, which is these highs here, and now we are seemingly coming back to that general area. If the market cannot move above that line, then the next trade should be to the downside. So clearly coming back to test that line. If we see resistance here, then one can assume that the next swing trade is to the downside. As far as the Dow is concerned on the daily chart, so here we are moving above the recent daily closing high, and the level to watch there is 17,073.95, which is the recent daily closing high. So right now we are seeing the market push above that. Short term, that's a good breakout, suggesting that as long as the market can hold above that recent daily closing high, this is a good breakout, and the market can go on to trade higher. Now if it moves back below that line or that number of 17,073.95, then maybe that's when the market stalls. But for now, this looks like a good breakout. Also, we can watch the RSI, because we are coming back and testing the recent break line. As you can see here, there was a slight break in November. We can draw a line from there. And so right now, as long as the market can continue holding above that red line, that's good, suggesting that we shouldn't be too surprised to see higher prices unless the market coils back below that red line. So right now, the number to watch there to summarize this daily chart here is if the market can continue holding above the recent daily closing high, again 17,073.95. Let's give the benefit of the doubt to the market bulls. Now problem comes here because short term we are running into RSI resistance, or at least we are seeing the RSI run out of momentum. We are making a slight higher high on the Dow hourly chart, but yet on the RSI, the RSI is making a slight lower low, and the RSI is not moving above 61.8. Sorry about that. So anyway, so slight higher high in price, lower lows on the technicals, and while this was making a higher high, the RSI did not move above 61.8. That generally tends to be the worst type of negative divergence. So maybe we are setting up for a pullback based on this chart, unless the market can clear that declining RSI resistance line. If we take a look at the Dow 30-minute chart, keep in mind that this recent move with the market up about 200 points came when the market hit this level here at the lows of yesterday. We touched that line there. This line connects the recent RSI lows on the 30-minute chart, and as of yesterday at the lows, the market hit that, and it's been up since then. Right now, on the 30-minute chart, we are seeing the potential for the market showing negative divergence, with the prices making an improvement, but the RSI really coming back and showing topside resistance. So this chart by itself is suggesting that net short term, the market is going to be pressed to the downside for some type of a pullback. Let's take a look at the Dow Transports. Dow Transports are a little change for the week, up right now about 0.34, and we can see that we are still showing the potential for resistance around here, since the market has come back to this level here on the weekly RSI, connecting highs going back to 2014 on the RSI, and this is where we are trading right now. So it would make sense around here for this to be a resistance area. Keep in mind that coming off the highs, we had broken through this line here in May of 2015. That break during this week has brought the market lower, in fact substantially lower. So what we can do here is draw a line that should give us some reference point for future sell points, something like that. We can see we've hit this line once before for the highs there, and right now we are back to that level. So clearly, if the market cannot move above the red line week to week, then the next meaningful swing trade is going to be to the downside. Otherwise, market bulls would like the market to clear those two lines. So the line connecting the highs and the red line, if the market is to move higher, you'd like to see the market break out above those two lines. But given what we have right now, we are still looking at resistance and resistance. So right now one can conclude that at this rate, more than likely we show resistance here after a nice move to the upside, almost 8 weeks. Resistance next, more than likely, and then a swing trade to the downside. Take a look at the S&P 500 long-term monthly chart going back to 1990. You can see uniform action support at the 50 RSI level for the lows of 1990. Support here at the 50 level for the lows of 94, 95. And here we can see also support in 2011 for the lows there, and now in 2015 and 16 the market showing support, suggesting that month to month, like other markets we've seen, the monthly charts look very stable. And so as we are noticing here on most of these charts, we can see that the weekly chart is where there seems to be some type of a short-term problem, because markets are coming back to test the highs on the weekly chart. And if the market cannot move above these highs, so on the SPX, clear line of resistance, if the market is to move higher, of course then we need to take out that line of resistance. Otherwise, if it is confirmed as resistance, then the next swing trade is down. Keep in mind that if you go back to the recent highs here, late 2015, you can see that the RSI broke down here, which was in late November, for the highs right there. So we can draw a line from here, which is where the market is coming back to. So if the market is to show resistance on the red line, then that would suggest that the next swing trade is down. Otherwise, market bulls would like the market to eventually clear that line of resistance. And again, net, we are coming back to test that line. And until we can clear that line of resistance, one can only assume that the market is coming back to test that line. And the way things are setting up, in my opinion, if we show resistance, then the next swing trade is going to be to the downside. Now, if we take a look at a 2-year daily chart, so 2-year daily chart for the SPX, connect the line connecting RSI highs on a 2-year daily. As of right now, you can see that the market is coming and ending Friday's session close to that line. If we can't move above that line on this 2-year daily chart, then that might suggest that even on a daily chart, the next swing trade could easily be resistance here and then a pullback. Otherwise, this is where market bulls need to press and move higher, move above this line connecting RSI highs going back to 2014 on a daily chart. So again, this line connects the highs of November 2014, the highs of November 2015, extend that line, and you can see that we are coming back potentially to test that line there. I look at the S&P 500 daily, and you can see that we are also breaking out short term on this for the above the recent daily closing high. And as long as it can hold above that recent daily closing high, the level to watch for the market to defend for the SPX is 2001.76. So anything above that, you can give the benefit of the doubt to market bulls. Otherwise, at some point, if we move back below that number and break back below that, anything back below that is when the market would be telling us that we've hit some short-term resistance. So above 2001.76, the market is good. Below that, the market can be looked upon as being a little bit on the bearish side. On the hourly, we are looking at the S&P 500 ending the week here or close to it with about 30 minutes to go at the highs for the day. Yet you can see that the RSI is not moving any higher. Keep in mind that the RSI for now continues to hold below 61.8. This tends to be the worst type of negative divergence. At this rate, if this continues being the case, then the next swing trade is definitely going to have to be to the downside. Keep in mind here on my hourly charts and 30-minute charts, I'm using RSI setting of 26. So let's conclude this by taking a look at the 30-minute chart for the SPX. And here we can see again the market coming and tagging intraday highs for the SPX, but the 30-minute chart continues to trade with resistance on this line, or let's call it negative divergence. So I think net short term looks like markets could be setting up to begin the week with a pullback unless they can clear the resistance on the weekly and the resistance on the daily and the resistance on the hourly and the resistance on the 30-minute chart. So this is how we are ending the week. Eric Muadh, muadh.com. Good luck, peace, and blessings. ECS.